All right. Good afternoon, everybody. I know it's a Friday afternoon, and people are getting excited for the weekend and the upcoming 4th of July holiday. But we did have a couple of USDA reports coming out today. Obviously, we had the acreage report that was highly anticipated, and a lot of speculation happened leading up to this report. But then we also had the grain stocks on hand report. I know this report tends to get overlooked from time to time, but it is important, and it does help finalize and get us closer to those ending balances on the consumption side for the 18-19 crop year, which we're still in today. So I'm going to go through kind of what I saw in the reports today, and I'm not going to lie, it was a busy day. Some big shockers in the reports. I think by now some of you have probably dove into it, started looking at it a little bit, but it kind of caught people off guard. And there's going to be a lot of speculation about what was USDA thinking, what was USDA doing, and I'll talk a little bit about this a little later on some of the reasons why I think USDA went ahead with their reasonings. But I do want to just up front say, NASS, the National Ag Statistics Service, is a wonderful agency that does some really good work. They do conduct surveys and hand them out to the people. They collect those, they report on those, and I found them in my short time working, I found them to be pretty receptive to ideas, but also, reporting what they find and then recognizing that sometimes that's maybe not actually what happened. So we'll talk about all that. I do want to show this picture. Big credit to Elizabeth Hawkins. She's our state precision ag specialist here at Ohio State University, and she took this picture and sent it out, put it on Facebook. And so I asked her if I could use this for this because I think it's just a wonderful picture of hope. I know this growing season's been tough and rough on us all, but I think it's a wonderful picture of corn growing in Western Ohio and sunset on it and hope of better days to come. She did want me to point out, though, that she was sitting on the ground when this picture was taken. So the picture makes it look like the corn's taller than what it actually is. And she was sitting on the ground, but took this great photo. So as we proceed through the slideshow, just a couple logistics and housekeeping topics first. This webinar and materials will be available shortly on the farm management website at AED. Here's a screenshot of the webinar page, or the page, the farm management page. There's a couple of things on here that might be interest to you. First off, if you're a dairy producer, we are actively going through dairy margin coverage training right now. That started on June 17th. We've done about 30 meetings to this point. So several meetings in a relatively short period of time. And so those are all housed under the 2018 Farm Bill tab that you see there as well. This webinar and material slides will be housed under the Farm Management Webinars tab. I do want to give credit to the University of Illinois, Scott Irwin and Todd Hubbs. And then some of these slides are kind of inspired by the USDA executive briefing. But Todd and Scott work over at the University of Illinois. They always say that you take on kind of the research focus of those you study under. Well, I didn't study at the University of Illinois, but I have learned a lot from Scott and Todd over the years. And so you'll probably notice that some of my slides reflect some of their work. Just normally from, that's where I learned and that's where I'm sitting. And finally, if you have any questions, feel free to email me. My phone number will be at the end, but the email is probably the best way to reach me as we move forward. So with that, let's talk a little bit about the outline today. And I know this bar is kind of in our way, but let's talk a little bit about the outline today. We're going to start today talking a little bit about stocks for both corn and soybeans. Again, not highly anticipated as much as the acreage report was, but still important. That'll kind of wrap up our old crop, and then we'll dive into the new crop of corn and soybean acres, our first indication of maybe where we can start looking for total supply in 19 and 20. And then just kind of a feel-good thing, as the reports came out at noon, I do a spot for Ag Day TV, and I was running across campus to go to the studio to film my Ag Day TV spot, and my mom sent me this picture. We started wheat harvest at home in western Missouri today, and so she sent me that picture saying it finally dried out enough to take something. It's a beautiful picture, I think. Of course, I'm a little biased, and so anyways, I want to give a shout out to my parents, mom and dad, that are back in western Missouri harvesting wheat today. So hopefully things go well and everything comes out all right. Oops. Okay, so let's first and foremost, let's start talking about the expectations going in today for old crop products. What I've got here, and again, don't look at this blue bar down here because this is, the acreage report. I don't want it to distract from these quarterly stocks just yet. But if you look here, this first column, this is where we had stocks on June 1st of this year. The next column is the average trade guess going into today with the highs and the lows. If we look at, where we were at on trade guesses, corn and soybeans and wheat, all three came in below the average trade guesses, which is, if you're excited about higher prices, which most producers are, maybe not end consumers like, livestock producers and other, but if you're looking at ending stocks, we did come down from ending stocks. Corn pretty significantly below, where the average trade guess was. If we start looking at, some of these numbers over here on the right, I've got the highest for June in here. Really, that doesn't really relate to corn or wheat, but I threw that in there for soybeans because we broke a record last year for June stocks on hand at 1.2 billion bushels in June of 2018. You look back here and we're sitting at 1.8, almost 1.8 billion bushels. So not only did we break last year's record, which was a record in itself, but we went way past it. And so definitely, those large stocks have been holding down the market. They've been putting some downward pressure on prices, or just kind of hanging over the market as we move forward. But definitely some good news to see that it came in a little bit lower than what we expected going into today. So again, let's look at these, old crop stocks on hand. We could say that we're turning the corner. That purple bar there on the end, it represents 2019 and our June 1st stocks from today. We're sitting at about just a little over 5.2 billion bushels on hand. This is the first time since 2013 that we've actually had a decrease from the year prior. Let that sink in for just a second. This is the first time since 2013 that we've had a decrease in June 1st stocks over the year prior. And so we did come down a little bit from last year. Not a lot, but we did come in 100 million bushels basically. So that's definitely a positive. You could make the case, are we turning the corner on corn stocks? At least on the stock side of the picture, for current stocks on hand, yes, I think so. Then when we start talking about acreage, I think next year stocks could be even tighter, which again, if you're looking for a higher corn price, this is all spelling positive news for producers of that. If we look at the difference between June 1st corn stocks and the average trade guess, remember I told you that we kind of had a little bit of a shocker to where the corn guess, or the stocks on hand, was lower than what the average trade guess was. You have to go all the way back to 2015, the last time we saw a shock in a positive price and an upward price direction. But you really even have to go back to 2010 to see a drop as large as what we had. We came close in 2015, 120 million more is what the average trade was guessing than what stocks came in at. Again, this year we were 130 million bushels, under what the average trade guess was. So that was a bullish sign for to the market. But again, this was all going to get overshadowed later in the day due to acreage. I'm not doing a very good job of keeping a secret, or keeping the secrets down the line. But I think we all understand that acreage today was going to overshadow the stock. So definitely some good news here on the stock side of the picture. What does that mean? Well, that largely means that third quarter feed and residual use was a lot higher than we expected. We had a disappointing feed and residual use in the second quarter. There was a couple of reasons for that. One, when you get to the second quarter of the year and you're starting to look at feed and residual use, and it comes in surprisingly higher than what you think, stocks come in higher than what you think they are. That could be reason for two different things. One, that could mean feed and residual use was a lot lower than what you expected it to be. Or the second thing was that the prior year's crop was actually bigger than what was originally estimated. And I'm going to side more on the later than the first for this, or at least for that second crop. And we talked about this back in March. But with the amount of livestock numbers that we see on hand across the country, it's hard for me to believe that we actually had that low of feed and residual use in the second quarter. There wasn't something more along the lines of that the 2018 crop was just bigger than what was reported at the time. But if we look at these third quarter feed and residual uses, yes, we're starting to see that feed and residual back up to where we'd expect it given the livestock numbers that we're seeing. This is the largest feed and residual use that we've seen since 2009. Again, this is partially what's contributing to the slides earlier where I showed a decreasing feed and residual use over the year prior, and the estimate that beat the trade guesses, just from the standpoint that we had a really low feed use, at least again, whether it was feed use or whether it was a larger crop on hand in the second quarter. This is definitely positive news, at least for stocks, to see this feed and residual use back up to where we'd expect it to be moving forward. If we look at the first 3 quarters of the year, again, we kind of had that really rough second quarter. So we're adding the 1, 2, 3. So basically September through the 1st of June together here to get that 4.6 billion bushels in feed use. Again, USDA is currently estimating estimating 5.5 billion bushels of feed use. So we've got quite a bit of ways to go to get to that estimate. But if we look at this next one, what's needed to reach that 5.3 billion bushels of feed use, we're looking at 685 million bushels on hand as needing what we need to feed this month of June, July, and August to meet USDA's estimate of 5.3. I think we can get there. Looking at the prior couple years, I realize this is a little bit on the high end of where we've been. But again, looking at the feed uses from this third quarter, the amount of livestock we have on hand, I think it's possible we do get there. Now, something that could hamper us in this fourth quarter is if we start seeing acreage and start seeing supply really drastically decrease in 2019 and 2020, and we start seeing some feed rationing this summer as kind of a result of people and the expectation of what's going to be available this fall. So definitely something that's not out of the picture, but a little bit further ways to go. We could see USDA lower that feed use number a little bit more, but I think it's pretty realistic. The big concern for me on the corn consumption side for the remainder of the year is in export values. And what I've got here is I've got the three previous marketing years and then the current marketing year in black for accumulative U.S. exports. And you can see that we started out the year really hot in corn exports following that really strong 2016, 2017 export year at the beginning. We started off really hot at the beginning of the year, and we've really flattened out as of late. Part of that is U.S. competitiveness against the dollar and some of these other countries. Another factor as of late is the expectation that South America is going to have a bumper crop, and they're going to be competing with us for export space. But our corn exports have really started to lag. We've really flattened out. And I'm expecting, I think we could see, just a little bit of a reduction in corn exports before the end of the year. We'll see if USDA actually does it. We'll have to keep an eye on it as we move forward, but definitely not a positive for the corn market, especially if we have a short crop this year, either from acreage or yield or both. That's really starting to spell trouble for corn exports in 2019 and 20. So if we look at the balance sheet real quick, and again, this is just looking at the consumption numbers from last year because we had supply basically figured out. So that top part up there, that's supply for the year. We found that out last fall. So we're really just looking at the bottom half, this consumption side. Again, I think we are right there, kind of in the mix of that feed and residual, but I wouldn't be surprised to see USDA shave that down to 5.275 or even 5.25, just kind of give us some more wriggle room. That 600 million bushels and a little more is definitely doable, but I think it's maybe a little bit of a stretch, especially if we have a short crop coming this summer. We start seeing some feed rationing. Again, the other one that I'm looking at right there is the export value. I think we could shave it just a little bit before the end of the year. We've whacked it pretty good in the last couple of months on the corn exports, but I think it could come down just a little bit more. The one I didn't change was ethanol, and it's been no surprise that ethanol has been soft to start the year, but we have seen it pick up just a little bit. Corn used for ethanol pick up as we've entered the summer driving season, which is expected to see more gallons of fuel being used and then thus more ethanol gallons being used. I will say, though, that if I look at these numbers today from where I was projecting back in November, there's a couple of things that I was a little taken back by. One, I did not expect exports to be as low as what they've been back in November when we had the Ag Policy and Outlook Conference. So I was high on corn exports last year. The other thing I was a little high on was ethanol. I thought we could see a little bit stronger use of ethanol. But I pretty much had feed and residual pretty much right where it ended up, or at least where it's at for the year, largely just because we've seen a couple of years of USDA whacking that feed and residual number and throughout the year, starting out with too high of a number and then whacking it as we move forward. So, I'm 300 million bushels off from my November estimates. Again, that was just largely those ethanol and export numbers. I thought they'd be a little bit higher, especially the exports. We lost our competitiveness on the price a little bit. Strong U.S. dollar makes our exports more expensive overseas, and then we're seeing a really strong crop coming out of Brazil and South America on the back half of the year right here. So sitting at 15.6% ending stocks to use. I think that $3.60 there, I didn't put a price there because, we've got other things to talk about today as well, but I think that 360 is probably not terribly that far off. If we look at old crop soybeans real quick, again, you see that purple bar there on the end. It really strikes out. We set another record. That 1.2 back in 2018 was a record in itself. It was just a little bit higher than the 2007 record. And so we did set a new record in 18, and then, another 570 million bushels and stocks on hand again this year. So large stocks, that's been suppressing our price, holding it down just a little bit, but we'll talk about acreage here in a little bit. Basically what this was spelling, and what as we went around the state this winter and did outlook meetings to producers, a lot of you probably heard me talk about, we've got a lot of soybeans on hand. One way to correct this is just to plant fewer acres of soybeans. And so we'll talk about that here in just a second, but we did have large stocks going into the year. Another positive, just like corn, the trade guess was high. So if we subtract the soybean stocks minus the average trade guess, we do get about 70 million less bushels than what was expecting. That provides bullish signals to the market on the soybean stock side. So again, we had a couple of years here where the trade was over guessing the market. Which is at least for the higher price, the last 2 years has been a positive. The last year they were really close. This year, a little bit further off on the use. Similar to corn, something that continues to give me pause for concern is soybean commitments and soybean exports. What I've done here is I used to report exports very similar to how I do corn, and I've switched it over to talking about soybean commitments. And you might be sitting out there and asking me, why am I going to talk about commitments? But it's what really commitments are. They're outstanding sales, what countries have told us they're going to purchase from the United States, and they've actually locked into an agreement with, plus the exports that are already overseas. And the reason I started doing this was, if you remember back early this spring, we had 2 weekends right in a row, like February, where China came out and announced 10 million metric ton purchases of soybeans. What I'm showing here in this graph, the red bar represents China, the purple bar is unknown destinations, and then the gray bar is the rest of the world. And what you see is that, first and foremost, the red bar has gotten smaller. The Chinese consumption and commitments of soybeans from the U.S. is down. You could make a case that part of this is due to the African swine fever that's wrecking its way through Asia and Eastern Europe. But then the other thing that is really interesting to me is, they had those back-to-back weeks of promising 10 million metric tons of soybeans. To date, their commitments of what they've contracted with the United States and what's actually left to go overseas is sitting just under 14 million metric tons. And so, as you can tell, we're a long ways from those 20 million metric tons they promised us. Not only that, but if you look at the previous 3 years, back in 16 and 17, we were up 37 million metric tons. Last year, 28 million metric tons on the back end of that slow, the kind of the downturn towards the end of the year. So we're a long ways from what China has normally bought from us. But we're also, these smaller countries, while they've made a big dent, that gray bar is a lot bigger. So those are all the other countries around the world that are buying soybeans from us. Our total soybean exports and commitments to date is lower than what they have been the previous couple of years. Now, USDA did announce just a while ago sales to China of another 544,000 metric tons. So they announced this purchase. This is the first purchase over 500,000 metric tons of soybeans since kind of the trade talks fell apart there in May. So positive news. This is ahead of Presidents of China and the United States meeting tomorrow. And so we'll see, what this materializes. But we're starting to run out of time in terms of these exports that China has committed to. We're looking at, all of these unknown exports right here. All of those sit in exports that need to be shipped as always. So that's something to keep in mind there as well. But, if we look at bushels, current exports equal 1.3 million bushels, which is, significantly lower than what USDA has got estimated. But then if we take into account all commitments, and if we ship everything we have, that's 1.75, which is over what USDA's got estimated right now in the WASDE reports. It doesn't seem like USDA thinks we're going to be able to ship, the commitments that we have. We're not seeing big purchases outside of the purchase today from China. We're not seeing big purchases of soybeans by the rest of the world as Brazil's soybean crop is now, coming onto the market as well. So just things to keep in mind. If we look at the old crop soybean balance sheet, and again, I apologize for the bar at the top, but if we look at the old balance sheet, again, I'm keeping supply the same. I think crushing, even with a little bit lower price, I think has a little bit more room to go this year. I don't know if we're going to increase it 15 million bushels, but I think we could see somewhere in the neighborhood of 5 to 10. Crushing in the U.S. is pretty maxed out. We're pretty much crushing at our capacity. So we're not going to see huge crushing numbers, but I think we could see a little bit upward movement on the crushing, especially as we see a lower price in soybeans and it becomes a little more profitable, and that spread for soybean crushers becomes a little bigger. Again, I think we could see a little bit. I'm raising those export numbers just a tad bit. 25 million bushels over what USDA had exports at, largely due to that purchase today, the announcement today of soybean commitments from China, but then also just the amount of soybeans that we've still got left to ship. I have hope that we can ship some of those. I don't know if we're going to see large purchases of soybeans, but I do hope that we can ship some of the sales that we already do have. And we're sitting there at ending stocks to use at 27.2. I've got it at 26, but again, probably not that far off from that 850 that USDA is projecting right there. So that was kind of the good news. Now let's get to the meat, I guess, of the presentation when we start talking about these acreage numbers. And this is where the big shock of the day came in. Corn came in at 91.7 million acres. Now, folks, that's over last year's corn acreage. Now, a couple of things to keep in mind here. USDA does these reports the beginning to middle of June. And I think today what they did is I think they reported what farmers told them they intended to plant. So again, this is maybe a little bit more farmer sentiment than it is realistic expectations. But we've had a couple of days here in the Eastern Corn Belt to plant a couple of things. I have seen some corn go in, especially those that have livestock. We've seen corn go in. But again, corn coming in over what it was last year, and 5 million. Again, that middle average column right there that says average is average of traders. What the trade was expecting today, it came in 5 million acres above the trade. So big shock, big bearish shock to the corn market, even though we had the bullish stocks in the first half of the presentation. The back half's going to overweigh everything that we had earlier. So some downward price movement there. If we look at the soybean side of the equation, we see a reduction of another 4.4 million acres from what the trade was expecting. This is even lower than the 4.6 that was expected in the March planting intentions report. So some of those acres on the soybean side could have gone to corn acres, especially when we think back to March and February where we were looking at futures prices at the time. I know here in Ohio, I was going around the state and asking people, and at the time, if you take into account expenses, it wasn't terrible to look at a soybean balance sheet and actually see returns for soybeans above corn returns per acre, just given where the futures prices were. But that relies on what? Well, that relies on you selling your commodity that day and not waiting. And so I think we had some producers that chose to exercise that option, but I think we had a lot of producers that when we got around to April and May and the soybean price really started to slide, I think we saw some soybean acres leave and go to corn. But then we started having all this wet weather here in in May and June. And so some of those corn acres I don't think got planted. So where am I going with this? What am I trying to tell you by kind of going through that soybean and corn, explanation? I actually think our corn top increased. Remember, you can't look at the March intentions as the baseline when you get to June, because we've got a couple other things that happen. And so I actually think because of that soybean downturn and maybe a little bit of a rally there in April and May in corn, but then really in May and June, that rally of corn markets then, I think we did see an increase of corn acres. And I think that top got up to maybe like 94, 93.5 million acres on the corn balance sheet. As we look at that. So I'm not terribly surprised, I guess, now if you take into account, a couple of weeks ago, what farmers maybe were expecting, maybe it's not overly that shocking to see these numbers. I will say that, that 97 or 91.7 came in higher than anybody was expecting. So for me to say it's not shocking, I'm sitting here telling you I was shocked, and I had to look twice at the report to make sure I was looking at the report, at the same time. But I think there was a lot of farmer sentiment. If you think about where prices went in April and May, we could have seen, especially on the soybean side, I think we could have seen an additional couple of million acres of corn come into picture, and I think that's what you're seeing there. So I'm not sure that number represents all the preventive planting that's out there. If we look at total acres, now this graph, let me explain a little bit. So this is principal crop acres, CRP acres, and then prevent plant acres on the top. And the prevent plant acres I get from FSA. Back in March, that 3 million was the average of the previous 3 years for prevent plant. So I just took an average of the 3.4 and 16, 2.6 and 17, and 1.9 and 18 to get up to 3 million acres. So that's where I was getting that, assuming average weather, average conditions, right? We see that 315 million acres of principal crop commodities. And of course, CRP is roughly about the same as where we were, because we haven't seen the added enrollment from the increase in CRP in the Farm Bill yet. But you'll notice, we're down to basically 6 million acres in June from March. So that's that cap. But again, I do think we did see some of those soybean acres move over to corn. Now that 12.5 that I got up there for prevent plant. Now this is just kind of my best estimate, but personally, I haven't heard a lot of people saying, they're taking some cropland and turning it to pasture. I still think we saw that the last couple of years, especially maybe like after 15 going into 16. I think we saw some of those acres coming out of cropland and going into pasture land. But, that 12.5 is, I think, somewhere in the range of where I think we could see total prevent plant acres. That's actually probably on the higher end. But what it does is that 12.5 gets us back to the total acreage in 2018. I don't know how much acreage we've lost from 2018 to this year, with just people not planting some of their marginal ground and other things. So I just, 12.5 I think is on the higher end. Something more along the lines of like 10.5, 11 is probably a little more realistic, but we could even see something as low as 8.5, 9. I would be shocked to see prevent plant acres, total prevent plant acres, just given the weather that we've had, come in under 8 million acres this year. Now, we had 8.3 million acres back in 2013. We had 9.6 back in 2011. And so we have definitely been there in terms of prevent plant acres. But if we look at 12.5, even 11.5, 10.5, we're bordering on historic prevented plant acres for 2019. So if we look at where those principal crop acres came out of, now this is the change from last year in principal crop acres. A lot of red across the board showing that we have decreased, at least total acreage. You look at Ohio there, we're down a half a million acres, a little over 500,000 acres. Indiana down, Illinois down. We see big drops in South Dakota, 2.1 million acres of a decrease in South Dakota. You see those pictures of their soybean piles that they had this summer, and it's, and then you couple that with the weather that they had. Remember, they have an earlier prevented plant date for corn, so it's maybe not totally surprising to me to see South Dakota that far down on acreage when you look at their soybean piles that they had staring out their window that they had to look at every day, and then just the wet weather they had this spring like everybody else to get their corn in. I think they probably reported to NASS that they were done for the year, and I'm going to guess a lot of the prevent plant that's captured in the NASS numbers came out of South Dakota. Not also, I wouldn't say it's out of the question to see 500,000 acres in Ohio come out of the picture in terms of, I'm sure that captures some of our prevent plant. Our county extension educators, have reported somewhere in the ballpark of 600,000 to 700,000 acres of prevent plant corn. And so, I think that number's a little low personally, that 500,000. I think it could get bigger in Ohio as we move forward. So I think you should look at that 500,000 in Ohio as kind of the bottom, expecting maybe a little bit higher decreases in acreage above 500,000 there. Probably the biggest chart in the executive briefing that they give to the U.S. Secretary of Ag was this chart right here. And let me explain what this is. If you look over there at that 19 line, so 2015 to 2019, these are annual years of how much of the crop is still left to be planted at this date. Look at that 16.7% for corn still left to be planted. If you take that 16.7% and multiply that by that 91.7 million acres, we're looking at over 15 million acres of corn still to be planted, or that producers intended to plant when this survey was done. I'll tell you, we have had a couple of days here the last couple of weeks. I know I've seen some corn go in the ground, but I don't think we've planted 15 million acres the last couple of weeks. So you look at that 15 million acres for corn, 33 million acres for soybeans. Those are a lot of acres that we've still got sitting out there. 48 million acres still planted in the Corn Belt. And so we could start thinking about, that prevent plant number again. And if we're sitting there after the date, for prevent plant deadlines for most, in fact, all states when this survey was happening, I know there was some wiggle room. I know some people still wanted to plant. And so we've got a number there, but I'm going to throw a couple ideas at you just to kind of give you where I think is happening within this 15.3 that producers are still reporting to NASS that they intend to plant. First and foremost, I think a lot of people were starting to look at their prevent plant options and their prevent plant payments and saying, wow, this isn't returning me a whole lot more than cost, especially if I have some of my variable costs that I've got to eat, and effectively they become fixed costs of seed and chemical. This isn't returning me hardly anything. In 2019, if we were looking at some of these balance sheets, was a year where we really needed to turn a profit here in Ohio, at least, build some working capital back. And those prevent plant payments, why they helped and they got us, at least above fixed costs in most cases. If we had any variable costs that we need to add in, we were probably negative on a prevent plant return. Plus, we're definitely not building any working capital. And so I think, there was an interest in going ahead and planting and running the wheel to see if they could get something in there for hope down the road. And I use the term hope from the standpoint of, we had seen price continue to go up. They were seeing other places around the country struggle, especially here in Ohio, looking out at places like Illinois, Indiana, Michigan. We were seeing, other places struggle and the price go up. And so the want to mud in some corn and get something growing to take advantage of that higher price later on. That was the first thing. The second thing was the announcement of the market facilitation payments when they came out. They made the announcement that there was going to be another round of market facilitation payments this year, but then they did not announce a specific payment rate. All we knew was that you had to plant something to get the payment rate. And I talked to a lot of producers here in Ohio. A lot of you called me, asked me where I thought those those MFP payments were going to be. I gave you my best guess. Kind of where I thought the range was going to be, but there was a lot of producers I know that told me, that they didn't want to risk it, that those MFP payments could be huge. And so I think that encouraged people to keep planting a little bit longer than maybe what they normally did. The third thing, if there is a third thing, would be just kind of the interest around forage for livestock, especially on the corn side. I think that's why we see, farmers, again, report to NASS that they had intention to continue to plant, just because a lot of producers, especially in Ohio, maybe had some forage needs, and so planting some corn to make sure they got their forage. But if we look down here at this graph, again, this is the same numbers I was taking off the previous all planted acreage, that chart showing CRP, prevent plant, and principal crop acres. If you look at prevent plant acres as back as far as FSA goes, we're we've had a couple of good years here where we've been somewhere around 3 million acres, 2.5 million acres, but we have been up there on the high end for acreage. And so, I think 8.5 maybe on the low end of the scale. I think 12, 13's on the high end of the scale. So something maybe around 10, 11, 11.5. Maybe that's a little bit more realistic in total prevent plant acres for all crops in 2019. Again, that's a long ways from this 15.3 and 33 million acres that we've got up here on the chart. I know there's some people out there planting soybeans today, so we'll have to keep an eye on that and see where those numbers go. Again, I give credit to NASS. I think they're a really good organization, and I know there's going to be a lot of people that are really upset with USDA out of this report, basically, saying where did they come up with these corn acreage numbers. Again, I have to believe that NASS just reported what they got back in farmer intentions. And so they reported that, but immediately as they were reporting, they announced that they were going to do some re-interviews for these states in blue. Again, you'll recognize that's most of what I consider the Corn Belt anyways. Most of the major corn and soybean producing regions in the country. Ohio's in there as well. I'm going to do kind of a re-interview of what actually happened to those acres, that 15.3 that producers on the corn side said they were going to plant. Did they actually plant it, or did they end up putting it in prevent plant? And they're going to announce that with the August crop production report coming out August 12th. So that'll be a big day. August 12th will be a big day. A lot of fireworks going on then as we try to get a better estimate of where we are with acres. I will say, though, if we get to August 12th and we come out with 91.7 million acres of corn, like what we did today, that tells me, one, that the baseline for corn definitely was higher, that we definitely added some more acres into the corn, and we're seeing today that those acres are taking into account some of the prevent plant that's happening around the country. But I have to believe that we're going to see a little bit lower of a number come August. But again, we'll have to see that when USDA and NASS comes out with the crop progress report there on August 12th. If we look at where those acres went, this is just a change over last year from this year. This was a part of the executive briefing that they gave to the secretary, but the big one that stands out there is on the bottom, a little over 9 million acres of soybeans gone. If we go back to what I said early on in the presentation about soybean stocks, when I was going around the state of Ohio, and I kept telling people that we had large stocks of soybeans, and really the futures prices of soybeans just didn't make sense for me in February and January. And I kept telling them, if you're thinking about planting soybeans, you might want to go ahead and lock in a price, because I don't see how this price can hold with this many acres. And what we really need to do is we need to shock acres. And I remember I was up in Northeast Ohio in Stark County giving a presentation, and I threw some numbers up there that we needed to plant about 75 to 77 million acres of soybeans to solve our soybean problem. And they all kind of gasped a little bit. Well, this 9 million reduction gets us down to 80 million. If we continue to see challenges in planting, and we don't plant those full 80 million acres of soybeans, and we're down to like 78, 77, minus a few harvested, or minus a few failed acres to get to harvest acres. We're roughly at 77 million acres, 76 million acres of soybeans, which is, kind of that's the supply side response to where we saw prices go, and the enormous amount of soybean stocks we had. Some of those acres did go to corn. You'll see up here that about 2.5 million acres went to corn, but we've got some missing acres in this puzzle that aren't being reported. I don't think we've reduced total acres that much, and so I think there is some prevent plant acres being captured in this number along the way, but at least corn did pick up some acres. This makes me happy a little bit from the standpoint that producers recognized that on the fundamental side, we needed to reduce soybean acres to help insulate the price. They saw that, they recognized and responded to fundamentals, and we'll look at soybean acres here in a second. But again, as I traveled around the state, this is from February 13th when I was in Crawford County, Ohio. I just pulled this slide over from that presentation. I tend to look at the ratio between new crop soybeans and new crop corn on the futures market. If that price gets above a ratio of 2.5 times the corn price, or the soybean price is 2.5 times the corn price, or if it gets below 2.25 the corn price, meaning the soybean price is 2.25 higher than the corn price, we see acreage shifts, and I've got them labeled there. And on February 13th, I was in Crawford County, and at the time the ratio was 2.38. Sorry, that dollar sign shouldn't be there, but 2.38 was the ratio at the time. And Alan Lyons would not be happy with me because he told me to get rid of that dollar sign that night at the meeting, but I guess I didn't get it edited. Anyways, 2.38 was where we were at, smack dab in that range. And I asked the producers in the audience how many of them were going to switch their acreage allocations from last year, and not a single hand went up. And they all told me they were pretty much planning on planting the same thing. And then I said, okay, what did we talk about on the fundamentals of soybeans? What would be a rational thing to do looking at those soybean stocks that we had on hand in a reaction to price? And so again, as we went around the state this winter, several people had intended to plant soybeans. If they did, I really hope they locked in some prices early. If they did not, they must have switched out. They probably switched out of soybeans and went to corn acres, or tried to plant some corn acres. So again, we'll see how all this works out. But at least on the corn side, again, we see some additions of corn. We see some negatives in Ohio, Wisconsin, South Dakota, and Missouri. At least farmers in Ohio reported that they expected to plant 200,000 less acres of corn in Ohio. Even though, that kind of matches what we were hearing around the state at the time. But then you start wondering, okay, how much of these numbers take into account prevent plant? And if they are taken into prevent plant, especially in states like Nebraska and Iowa, how many acres of corn did they really intend to plant, at the beginning? What is that new top for Iowa and Nebraska, and maybe even North Dakota, if they did take into account, prevent plant in the reporting? We could be looking at the top. So again, what I'm showing here, this is the difference between corn planted acres and corn harvested acres. Now I don't have 19 and 20 included on this graph, but USDA indicated that 19 and 20, the difference was going to be 8.1, which is the highest we've had all the way back to 2012 and 13, the drought year, where we saw big amounts of failed acreage. Now, the difference between planted and harvested acreage can mean a couple of things. One, it can mean prevent plant. It can mean harvest or chopped for silage. And it can also mean failed acres. So part of what you're seeing here in these numbers and why they're a little bit so big is the amount of chopped silage acres that we chop across the country, and that's being figured in here too. So USDA did expand. Again, we've been hovering around 7.4, 7.5 the last 5 or 6 years here. And so they did go ahead and expand that to 8.1. I think that could end up getting a little bit bigger, especially if they stick with the 91.7. I'm expecting more failed, that between the difference between corn planted and harvested acres to be bigger than 8.1, but that's where we've got it right now. The other big question is what's the yield component going to look like, planting all these acres as late as what they are. Again, if we have that 15.3 million acres of corn left to plant and we start seeing, we plant a good chunk of that, we end up planting a good chunk of that, you have to wonder what type of conditions that goes in, and then what does that do to the yield on the back end. My dad loved to say, if we got things planted late, he would always say the top is now lower, meaning that, our chances of a higher yield. Now, I'm not naive to know that what happens the rest of the year is largely going to dictate yield as well. If it turns off hot and dry, we're in trouble. If it continues to rain, we have, some larger flooded fields, especially like in Iowa and Missouri, where the Missouri and Mississippi rivers are high. That spells trouble for the yield component. Right now, the trend yield for 2019 is 175.6. That's what the trend yield is. We've had 6 years in a row. That 2013 number at the time was above trend. So we've had 6 years above trend. I would be shocked, very shocked, more so than I was today, if we end up with that 175.6 bushels per acre, that trend line yield. I think USDA at 166 is close. It could even be a little bit lower than that. And so we'll start seeing that work into the market as well, working forward. And so we'll see how that goes. But again, I'm not expecting a trend line yield for corn for this year. One of the other reasons why I think it's hard to see a trend line yield is if we look at the crop condition of the corn that's up. So this is what's emerged, and what's being rated is in good and excellent condition. 56% good and excellent condition compared to last year at 77. So 21% less on the good to excellent ratio. I will admit correlation, or the the relation between the end of the year yield and conditions, plant conditions at this point of the year, there's a big gap, but we'll continue to see this develop as we move through the summer, make our way through. I do want to give big thanks to Aaron Wilson for providing this weather graphic. What we're showing here is the percent change of participation above normal for the last 2 months. And as you can see, for big swaths over Missouri, Kansas, Illinois, 200, 150+% moisture. Out here in Ohio, some big swaths of purple. That would be the 200% increase, double the rain of what we normally have this point of the year. We also see some slim areas of green down in the very southwest edge of Ohio, and a couple of pockets out east where we're about a little over normal, 10-15% over normal, and that's in our big corn producing regions in Ohio. 20 to 30% over normal participation, as close as we get to normal participation in the big corn producing regions of Ohio. So that's another reason why I think yields are really going to struggle this year, and we're going to come in potentially below that 166. So if we look at the corn balance sheet, what I've got here is I've got 4 columns. The first 2 relate to the end of the crop that we're looking at that we talked about earlier. Nothing's changed from these from the slide I showed you earlier. I just added 2 more columns on that represent the 2019-2020 marketing year, which is the crop that's in the ground. If we look at what I've done here, and I know this bar is in the way. Let me move this bar again. So what I've done here is I do think we have seen an increase on the top of the acreage. 91.7. I think that does include some prevent plant acres. And so, I have to believe it includes some prevent plant acres because I've had producers tell me at the beginning of June that they were, June 5th when the prevent plant deadline came around, that they were done for the year just because they couldn't get in and they needed to plant beans and make hay and other things. And so I think that 91.7 included some prevent plant acres. What I did is I think we've got more prevent plants, so a 6 million acre loss from 94 million gets us down to 88 million planted acres. I'm going to subtract that 8.1 off that USDA's currently got between the planted acres and the harvested acres, and that gets us down below 80 million acres of corn. At a 166, again, that could be on the high end, but at a 166, that's getting us to a total production this year of 13.2 billion bushels, 13.3 billion bushels. Adding in that slightly higher beginning stocks, remember I made some adjustments to the ending stocks of the current marketing year we're in, so we've got a little higher beginning stocks for next year. We're dealing with 15.5 billion bushels of total supply. I've made some adjustments down here on the consumption side of the equation. I increased feed and residual use up a little bit, made it a little bit stronger. Just given the livestock numbers that we've seen, I think we could be a little bit higher on feed and residual use, 5.225. That'd be lower than what we've got this year, but higher than what USDA's got in their June WASDE as of now. I've left ethanol alone, just largely because we have seen it pick up a little bit. It was soft to begin the year. It's picked up just a little bit lately. We'll have to follow ethanol as the price competitiveness of ethanol. As corn price goes up, that definitely does price ethanol in some cases out of the market, and in terms of ethanol prices. And so I've left ethanol alone for now, but I went ahead and shaved exports another 150 million bushels. This is largely due to the price competitiveness, the strong U.S. dollar at current. And then the other thing is the large Brazilian and Argentina crop in South America competing for some of our markets around the globe. So I've went ahead and shaved exports another 150 million bushels. That gets us to a total consumption of 14.2 million bushels, 1.4 million bushels of ending stocks. That's a 9.7% ending stocks to use ratio, which for me gets us, that's pretty much 10%. And when we look back at time when we've had a 10% stocks to use ratio, we've been sitting somewhere around $4.35. So I think that's kind of where we're looking at. I know that's lower than current futures. This is a season average. That $4.35 is a season average price, so we are going to have periods above it. Also, what I guess I'm saying there is if we have periods above it, then that also means we'll probably have periods below it. Why do I think we could have periods below that 435? Well, if we start looking and we start thinking about next year, up until what I'm sure is going to happen today with price in the futures market today, where we could limit down today, we had been looking at some prices that would really suggest increasing corn acreage in 2020 going into 2021. I know that's a year out from now, but I think that really does then drive down our corn price a little bit, especially if we continue to see Brazil and Argentina produce at the rate they are. We continue to see ethanol kind of maintain at that 5.5 million bushels. And we don't see major increases to feed and residual. I think then that drives our corn price in the end of the marketing year down below that 435. So again, that's a season average price, but something that I think seems pretty reasonable. Let's switch to soybeans really quick. A lot of red across the board. In fact, every state showed decreases in soybean acres. Look at the Dakotas. 1 million bushels down for North Dakota, 1.2 million down for South Dakota, 900,000 for both Minnesota and Iowa. Big decreases in soybeans. I'm not overly surprised to see Ohio just down that 300,000 given from the responses I heard across the state this winter. I do think that we did see more soybeans go to corn. So I don't know if any of that 300,000 that's mentioned there is prevent plant soybeans. I think that's just acres of soybeans that then became corn acres here in Ohio. It might contain just a few prevent plant acres, but I think we could see that number grow as we start to see challenges with soybean planting here in the next 2 weeks. We probably got a week and a half left in Ohio to plant some soybeans before it really starts getting at the end of time, basically. But so maybe another week, especially places like Northwest, Northeast Ohio. I think they've got a little bit more time to get some soybeans in if it stops raining. Today and this weekend looks pretty dry, so hopefully we can get some beans and corn planted. Again, this graph at the top just shows soybean planted acres the last couple of years. You'll notice the big drop off in 2019 and 20, all the way down to 80 million acres. That's what's being reported. In a way, this makes me pretty happy to see this because, again, we're recognizing that we need to make changes on the supply side of the equation to help support price above cost of production for most people. And so we see that drastic reduction there in soybean acres. If we look at the difference in soybean planted and soybean harvested acres, and I guess let me rephrase what I said earlier in terms of being happy. It never makes me happy to see these big reduction in acres because that largely means that people aren't planting and other things are happening to those acres if they're not going to other crops. I guess what's interesting is I did not think we would shock the market with acres as much as what we needed to work down some of these stocks and really give the price support to soybeans like what we thought, just because we know we're slow to move out of acres to other crops or take acres out of production. But the weather really pushed our hand this year, and so I think we see that drastic reduction of 80 million acres. So I think producers really did respond to the price signals, at least as of the last 2 months. Keep in mind, we did have decent prices there in April, or February and January. Just a couple of things to keep in the back of your mind. If we look at that difference between soybean planted and harvested, not near as big as what we see on the corn side, because this is largely all representative of prevent plant soybean acres and then just failed soybean acres, no silage acres in that mix down there. So again, same thing with the corn. What I've done here is first two columns, same thing as what we talked about earlier in the presentation. The back two columns, the crop that's in the ground and growing right now. What I've done here is I've taken 3 million off from that 80, just from the standpoint of that 34 million acres of soybeans that we still have left to plant. According to USDA, that seems like a lot to me to get to 80. And so I'm expecting some reductions from that 80. So I've lowered it 3 million acres to get us down to 77. Subtract off that 700,000 acres from planting to harvest. I'm throwing in a yield of 46 bushels the acre. Again, I think that 46 might be the top because basically what you need to think about here is all these acres that we're putting in right now are effectively double crop soybeans. That's really kind of where we're at. And 46 bushels might be a little bit high for double crop soybeans on the back end, even. And so I've got a yield of 46 bushels to the acre in there. 40 bushels to the acre, I think, is definitely in the equation as well. But again, we'll have to see how the summer weather progresses before that. That new ending stock or beginning stocks number that I revised on the ending stocks on the current year is thrown in there, and we get to a total supply of 14.56 billion bushels of soybeans in total supply. I've went ahead and left crushing kind of where it's at. I think we're going to have a stronger than expected year of crushing this year. But with saying that, we don't really move our crushing. We're at maximum capacity on the crushing side of the equation. So I'm not expecting big gains in crushing. We could get up to, 2.12 million bushels or billion bushels of soybean crushing. But keep in mind, as the soybean price goes up, that disincentivizes soybean crush plants. And so I've left it at 2.115 billion bushels. I do go ahead and lower the export number again for next year. I think I'm higher than this year, as I think we will have some trade renegotiations or some trade reallocation around the globe again. But again, I've got a lower value, and I'm really honestly part of that. My number there is taking into account the amount of soybeans we still have to ship for this year. If we don't ship all those soybeans this year, then that's really starting to set up next year. And you look at supplies of soybeans in some of these countries around the world, and why some of them are large, some of them are also starting to get tight. So we could actually start seeing a few more soybeans move next year than what we saw this year. So that gets us to a total consumption of 4.1, ending stocks down to 490 million. That's what I've got. And it is hard for me to believe that we got to below 500,000 or 500 million ending stocks. We'll have to see if this plays out, but at least that's what I got in the balance sheet right now, or at least what I'm, expecting as of today is below 500 million. And that's a big change from where we were, when we were over 1 billion bushels. So we shocked the market. We got our supply down, or at least that's what the acreage report is telling us. We're getting down to the 12% ending stocks to use. I think that supports an average soybean price, season average, $9.20. Now, it could be a little higher than that. I could see somewhere between $9 and $9.40, so I just shot the gap at $9. But I do think we could see a cash price somewhere around in that range for a season average price. So definitely, we shocked the market with enough acres. If we come in at 77 million, like what I think up there, that's 12 million less acres of soybeans than what we planted in 2018. Just keep that in mind. We reduced acreage 12 million acres of soybeans, if I'm right with that 77. And so, it's one of those that we talked about reducing acres to make supply and demand work, and we certainly did. So just kind of a summary, corn very bearish today. We will have to wait for that August report. I think August is going to be a big report. If they start lowering some of those acreage numbers down, like what I think they could, that'll tend to be a bullish signal. Plus, I don't know if the market's fully started capturing all of the yield declines that some of this late corn. If we start looking at 50 million acres, 15.3 million acres left to the plant of corn, we're mudding it in late. It's coming into the ground late, and so I think that does spell trouble for the yield component. How much prevent plant was already included in that 91.7? That's a good question. I have to believe there was some. I think there's probably still some more, especially if farmers told NASS that they planned on planting another 15.3. We could see a bullish signal heading into the August report, coming out of the August production report. So some things to look at. On the soybean side, very bullish from the standpoint that stocks were down, but the big surprise was on the acreage again. Lowered acreage. I think some of those soybean acres did move into corn, making that corn top higher than 91.7. But it's really surprising to see how much we shocked soybean acres, given how reluctant at times we are to move acreage out of production. Again, we've got that 6 million in total acreage that, is somewhere out there in different crops and different things. And so, it could still show up in the soybean balance sheet, soybean side of the equation. But overall, I think soybeans, I wouldn't be surprised to see us end up at 80. I think that's the top of the range, that 80 million acres. I'm expecting something more like 77, 78, but it wouldn't be surprising to see 80 million acres if we start seeing some of those 6 million acres that were missing in that first chart show up on the soybean side. Wheat, pretty neutral. Of course, the United States, we have to wait for Russia and Canada to come through with some of their wheat production, see where yield is on the wheat side of the equation. So hopefully this was useful to you. Again, if you have any questions, feel free to email me at brown.6888@osu.edu. A couple of just quick reminders, a couple of things we got coming up. The big one there on the left, Ohio State, along with the University of Kentucky, is hosting the Agriculture Outlook Conference this year in Cincinnati. This is basically the Corn Belt, and so all the way from Colorado to Ohio and North Dakota down to Oklahoma and Missouri, and everybody, all the grain outlook specialists get together and they go through their outlook for the year. The topics are kind of broken up a little bit with some policy and weather on the first day, along with the livestock reports, beef, pork, and dairy. And then Thursday we get into the crops. Todd Hubbs, that I referenced earlier, that kind of is an inspiration for this PowerPoint or whatever is, in terms of I learned from them. Todd is giving the corn update on that Thursday. So if you got nothing going on, the 14th and 15th of August, come down and join us. You can register at this link right here on this banner where it says for registration or more information. Go to osu.edu/summer outlook. Also, just keep in your back of your mind, November 12th here on campus at Ohio State, down the road at the Nationwide 4-H Farm Bureau 4-H Center. The Ohio Farm Bureau and Nationwide 4-H Center is our annual Ag Outlook and Policy. Again, we'll have some of the same speakers, Dr. Ian Sheldon talking about trade and where we're going. U.S. is going with trade policy. Ani Kachova talking about farm finance. We're going to have a livestock panel led by Dr. Brian Rowe. I'll be doing the commodity outlook and ethanol policy. So November 12th, put that on your calendar. It's free and open to the public. We will feed you lunch. We just need you to register at that link, that gosu.edu/2019 Ag Outlook. Then finally, it is a Farm Bill implementation year. The Farm Bill was passed in 2018, so we are going around the state right now doing dairy margin coverage meetings. They're happening right now. We've done about 30 in the last 2 weeks, so we're moving right along there. And then ARC and PLC meetings and decision aids will be coming in September. So be on the look for that. You can go to that link and see some of our resources there as well. And so with that, this is probably my most important slide of the day, because I do realize that this summer and spring has not been the easiest. And so if you need somebody to talk to, always feel free to call out and reach to me. That's why we're here at Ohio State. We're here for you as your land-grant institution. And so if you feel stressed and overly burdened, feel free to call out. And if you need somebody to chat to, my cell is there. The mobile down at the bottom, also my office phone, my email, and then also the AEDE, the department's email as well. So we are here for you. And if we can ever do anything for you, please let us know. Again, this webinar and materials will be on the farm management webpage. And we look forward to seeing you at some of our meetings this summer and this fall. And I look forward to seeing you around the state of Ohio. Have a great day.